Again, everyone, we did the look at gold. Now let's do the look at silver. These are both metals, precious metals. Well, silver is semi-precious, I suppose. Um, but these are very interesting trading and investing conduits, um, um, items to invest and trade in. They're commodities, technically, but they are very different from equities. They trade differently, they price actions based on different things, and they offer a lot of unique opportunities. I won't get into the silver and gold ratio. The price of silver does not fit to the price of gold very well. Um, Oftentimes, that ratio is very tight for long periods of time, and then suddenly it widens, and there's no correlation whatsoever. So let's just leave that alone for a minute. We've already covered the the bearish nature of gold. Now let's have a look at silver. Silver is not nearly as bearish. Um, this isn't a great looking chart, but I wouldn't say it's going to plunge anytime soon. Um, it stayed a lot closer to its lows than gold has. Um, it's putting in something of a base here. This is some pretty wild action. Um, but as you can see where my line is drawn just now, it almost looks like we've had a false break of the 14 and change level, and now we're holding it. Um, Not quite exactly a textbook bottom, but this looks healthier than gold does. We have a gap that's unfilled. It's down here at right around 14 and change, but we're not that far away from it. We're only at 1504, and the price could come in some more and fill that, and without too much damage being done, and come up again. Silver is different than gold. Silver is not an inflation hedge. It's not a disaster hedge. Um, it's not a currency hedge, although it can be uh, effectively used to hedge your risk against inflation. Not quite as classically as gold is. Silver is used in jewelry and has industrial uses as well. Silver, I'm not sure what the supply situation is like as compared to gold, but silver still needs to be mined because it's still being used. Gold goes into jewelry, but it doesn't have as rich an industrial use as silver does. Oxidized silver is a wonderful conductor of electricity. Silver is used in jewelry. It's used in some electronic parts. Silver solder is often used. Um, and it must be mined because it's being used at an industrial rate far greater than that of something like gold. Silver's a little closer to something like copper, although copper is much more widely used than silver. Um, so I like silver to the long side on a 10-year investment horizon. The all-time high for silver adjusted for inflation was $80 an ounce. That was back in 1988 or 87, right around there. Um, and since then, it's been in a downtrend. Let's look at a weekly chart. And if you can remember, a few years ago, silver was going nowhere. And then it turns out that some traders from JP Morgan were manipulating the silver market, and they were convicted of this in court. And the moment that happened, everybody woke up to the fact that silver was being suppressed, and it just totally went parabolic, came up, went absolutely crazy, put in the shooting star right around 50. Um, and like all parabolic moves, the move failed. This isn't because silver is a horrible investment. It's because people completely lost their minds and bought with no respect to fundamentals. And that's when you get a parabolic move. Always short a parabolic move because it always fails, as this one did. Um, this has been making lower highs for a very long time. And it has come down to right around 14 and change, which is very close to what it cost to mine silver. Silver got as low as 8 and change. It's actually been as low as 5 and change. When it was at 5 and change, and legendary investor Jim Rogers was buying hand over fist. And of course, people made fun of him, and they made fun of him much less when it was at 50. He had put a times 10 multiplier on his money. And he still likes the metal. And Jim is right, because silver is going to get a couple of big tailwinds. One is because the price is so low, mines are being closed, and that's going to constrict supply. And there's always going to be an industrial demand. Always, but always, but always. That is not going to go away. That may lessen a little bit, it may increase a little bit, but it's always going to be there. And silver has put in a very, very, very low price now. Remember, it did come from as low as 5. So even though it's been absolutely crushed, it's now down to 15. And that's still triple its level from 5. Everybody forgets that it was as low as 5. And all they can think of is the 50 mark, which is why everyone's bearish on silver. Now, the bearishness has really gotten extreme. And as you can see, the price is generally going nowhere. It's gone nowhere for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. This is what I prefer to see for a bottom. There aren't a lot of huge sucking gaps. There's not a lot of air under the chart. It doesn't look like it's going to suddenly plunge to 13, although it could. It could resume its downtrend. But this looks like much more basing action. If we look at volume, you could say that some big spikes here. This is a weekly chart, by the way. You could say that these last couple spikes were selling capitulation. There's been some decent buying volume. 1, 2, 3 candles here. Another one over here. Selling has lightened up considerably. This is, of course, seasonality has something to do with this as well, of course, but this is very light selling. If the selling continues to stay light for the next 3 months of the year, of the new year, and any buying takes place on strong volume, I would feel comfortable either going long silver or selling out of the money puts on silver. Because there's a very low chance those are going to pay the buyer. Let's close this, and remember, you are looking at a weekly chart. This still, technically, it's still a sell. I wouldn't call it a short. It's still technically a sell. It's below the Ichimoku cloud. It's below its 50-day, I believe. Let's add that. The 50 days declining. It's quite a ways away. Silver has not tested its 50-day in a while, and the 50 days still declining. The 50 days up at $18 an ounce for SLV paper silver. This is not the actual silver itself. That is XAG, I believe, and it varies. This is silver in dollar amount, and as you can see here, it does look a little different. We do have an inverted head and shoulders pattern here. It's at $15 an ounce. So even though SLV says 14, the actual that's not correlate perfectly with the price. The price is actually 15 and change. This has the same problem. It's in the cloud. It looks better on the actual metal. Let's change these to candlesticks so you can see it a little bit better. There we go. It's pretty choppy. It's under the cloud. It's not making new lows. The low is made back here at 14 and change. It is generally holding the baseline. It is now regained. Actually, I lost the baseline. Excuse me. It's in the cloud now, but it's right around the baseline and conversion, which are now turning up. It could continue sideways. I think sideways is the most likely direction for this. And again, you can make money on something going sideways. Sell a straddle, sell calls on one end, puts on the other. You make money if it finishes in the middle of those two. But this doesn't look nearly as bearish. This has been a very long bear cycle, and all bear cycles will exhaust themselves, especially in something like this that has an actual use. This is not a penny stock. This is not a tech stock that can go to zero and go out of business. This has an actual use. And when gold gets expensive, a lot of jewelry makers turn to silver, especially with the price so low. Um, if you ever watch jewelry selling shows, my mother watches them on TV, QVC, whatever. They push whatever they can. They will push stainless steel. They will push polished brass. They'll push whatever they can affordably sell. Okay, women love jewelry. The big joke is um, you only need to buy your wife one type of present. There's one thing a woman will never run out of, and that's jewelry. Um, so there's a healthy jewelry market out there, and when gold's really expensive, they'll use other materials, and that's what they push. We've got the lows from every single candle, uh, pretty much after here, holding the lows. The low here has not been taken out. It's at 1464. If that low is taken out, you look for another push down, probably to 13 and change. But except for these gaps, I'd prefer to see this gap fill. The low here was 1480. And again, that's just 20 cents away from where we are. That's not a massive move. Silver's being suppressed a bit by gold, but it's not making new lows. Gold is getting hit pretty good, even as we speak, I believe. Down 20 handles, and that generally freaks out the metals traders, and so they're not going to buy silver when gold's getting crushed. But I think when you see the metals move up, silver will either stay sideways or will move up before gold. And right now it looks like it's basing. Let's go look at the monthly. Always look at the bigger trends. Always look at the monthly and the weekly. The monthly, there's a big sell tail in this monthly candle. That's negative. That's bearish. The MACD is going sideways. I don't put much credence in the MACD, but it's good to check out. But last month's low is holding. The low is 1464. This is a great place to nibble long. I would not trade it here unless you want to trade some out of the money options, especially in the near term. Especially in the long term. But there's a big level at 18. It has to reclaim. It has not done that yet, so it's not bullish. It really needs to reclaim 18 first. That said, if you want a bottom pick and try to be a value investor, this is not a terrible place. I don't see it falling too much further. It could go down and test 12 or even 10, but I really don't think so. I'd wait another month or two before getting long. See if it makes new lows. If it doesn't make new lows next month or the month after, you've got 4 good basing candles. Especially if it puts in a reversal hammer. If it goes down, makes a new low, and reverses back into this base, that would be a very good temptation to get long. But you don't want to see any new lows that hold. If it makes a new low but it comes back up into price action, don't worry about it. Consider that a basing candle. This ran up to 50, just about 50, 48 and change on a closing basis, and half of that would be 24, which it's actually lost. We should be doing this on the actual metal price because, as I said, the paper silver price is not the same. And we gotta look at a monthly. Come in. Here we go. Okay, the high it's going to give us, can we look at a yearly? There's nothing wrong with looking at yearly charts. I hear people scoff when people bring up yearly charts, but successful major investors bring up yearly charts. The little guys don't. That's an important distinction. So here we are back at, on a closing basis, monthly, the last was 41.50. Okay, so half of that would be roughly 20. And we've lost 20 and dipped below. So this is either a big buying opportunity or silver is extremely bearish. Probably want to wait until it gets over 18 and change to really consider a long. But considering that the monetary, not the economic, but the monetary authorities want to see inflation come hell or high water, that will put a big tailwind under silver prices. Combined with silver mines being very depressed, there's in price, there's a great company, mining company, Silver Wheaton. This was a darling of the gold bugs and precious metals buyers for years, and it has gotten crushed. But as you can see, it is not completely bearish. We had a couple of false breakdowns there, but she's hanging on, going sideways right around 20. That's an important level. Right around here was at 19 and change. And on a closing basis, weekly, this is a weekly, look at a monthly. I trust the monthlies more than I trust the weeklies. This looks a little better. If you want a bottom fish, if you're a value investor, this breakout right here, this is a major breakout at the 19 level. We've come back and tested that 1, 2, 3 times. The third time it broke, but it reversed back in. That's a false breakdown. This could be a potential long. This could be a long. I would not be surprised if we have some serious issues with monetary policy this year, with deflation, and there's a large stock market correction of 20%, which is largely overdue, and the Fed has no choice but to go back to printing. Probably even more than printing. Probably printing plus buying additional options, additional debt instruments, as well as potentially forcing the banks to lend. Doing all of that, you'll see this in a long term. We got a lot of data here, so let's go to a quarterly or a yearly. You'll see this actually go back and make new highs in that case. I wish I had more time to show you here, but as you can see, another big tailwind here is this is a real mining company mining real raw materials. They mine more than just silver. Copper, I believe, zinc, I believe some other things. You'd have to look it up. But the world economy is still expanding. Asia is still expanding. There's 1 billion people in China, another 1 billion in India, and they are using raw materials. And they will continue to use raw materials because those countries are industrializing. Industrialization is a major, major tailwind to commodity prices and raw materials. The raw materials in this country really caught on fire, really became major, major industries and major, major profit centers when we began to industrialize. So I would not be surprised. I mean, on a technical level, you want to see 26 taken out. That's a huge level. There's resistance there. Once 26 was lost, it acted as resistance. So you'd want to see that taken out to the upside. But if you want to be daring and be a value investor and do your Warren Buffett impersonation, you can consider taking a retirement account or some long-term funds and buying some either yearly call options, some leaps, or else outright buy the stock outright. I haven't checked volume. That would be key, but price is holding up. Here we go. We got a big quarterly buy coming in on a hammer. That's what I like to see right there. We had decent buying back here, light buying, and good buying in a reversal hammer. So when it broke that level, instead of stepping aside and letting it fall, buyers stepped in and pushed it back up. That's what you want to see. That's great. That's a great sign. That was SLW, remember, not silver. This is silver on a monthly indicator. We can take a look at volume here. If you're going long, you want to see strong volume. Not quite yet. The buying volume eclipsed the selling volume. The selling volume has been very light, so that's a good sign, but it hasn't been really strong. I want to see some tall candles like this on the buy side, on a monthly or quarterly chart, and I'm not seeing it yet. So silver is not quite there. This is a quarterly chart of silver. Still having some selling this quarter. It's not particularly strong. It's not like over here. This was almost capitulatory. This is a big sell bar in June, but it generally went sideways. It's broken down a bit, but I mean, it didn't go from 18 to 10. Okay, it didn't get halved again. It didn't get crushed. It's come down to 15 and change, really more from a lack of buyers. And given the inflation situation, or lack thereof, I'm not surprised. But if it regains this level on volume with a hammer, that would be enticing. Again, selling deep out of the money call options, you know, to next year, end of this year, with time and a price reversal, those would pay. Last thing I want to check are the moving averages on SLV. Always check the moving averages. They're both still falling. The major ones are 200-day and the 50-day. If this continues sideways, and I expect it will, the 50-day will flatten and start to turn up. The 200-day will come down. Likewise, it takes a lot longer, but it'll come down, flatten, and start to turn up. When price regains the 50-day, when it starts to curl up, and that's going to take a while, and regains the 200-day and starts to turn up, that'll also take a while. That would be a good indicator to get long. The 200-day is falling very slowly. It's at 17 and change, 1790. It's not going to be down around 16 or 15 or so until March. I expect some fireworks this year. I expect the Fed may very well raise rates and then turn around and slash them again, as well as print, or try to do both. Who knows? They don't even know what they're doing. I would not expect them to maintain a deflationary policy, which is what they're intending to do right now. I'll believe it when I see it. So silver below the 50-day, it's hands off, but keep an eye on this moving average. Keep an eye on the cloud here. When this moves sideways and starts to move higher, regains the 50-day and regains the cloud and starts to get support from the cloud under it, great long-term buying opportunity there because silver is trying to put in a bottom. I wouldn't be surprised if we see another flush to 14 and change. I don't like that gap down there. There is still a gap at 14 and change. And gold is weak. So expect this gap here and this gap here to get filled and it to come back into this range and continue to base until it moves higher. The downside on silver is largely played out.